Welcome back, everybody. Sive Morten is here with the Forex Peace Army.com. Let's finally take a look at the cryptocurrencies in the Bitcoin market. So here we talked a lot about the overall background, why Bitcoin is falling and what to expect, what the critical levels for market. So I will not repeat everything again. Here we just prepare the update on the current situation, what particular trading setups we see. And currently it is really very thrilling moment. When I explain why I think so, you'll understand it better. So first, starting from the weekly chart, we see nothing interesting. We already talked about this consolidation, see some acceleration here with minor pullback. In general, overall picture looks bearish here with this acceleration tail closing of the previous week. But the problem, maybe not the problem, at least for the bearish this is the problem, that here we have big support cluster, which market really has problems to break it just in one touch. Probably here is some reactions, might be some fluctuations, some responses on this support area. But in general, market remains bearish in the current circumstances. As already said, the major driving factor for the Bitcoin is not the Fed meeting, it's not some performance of the yields or something, but liquidity. And as we explained, until the mid of the September, the liquidity in the United States will be shortened. So because it's really big appetites for United States Treasury, they would like to borrow a lot, they would like to add cash to its account with the Fed. So as we already said, it's approximately $500 trillion should be borrowed and taken off the market. That keeps Bitcoin under pressure. Despite that we've got the payrolls, we will get payrolls. Actually, it doesn't mean anything. If you will see, take a look at the previous reaction of the market on the payrolls, you will see no reaction at all, just because this is not a major driving factor for it. So what we could expect the nearest time on a daily chart, trading plan that we discussed works nice. So we said this is free drive, adds the points is one rate target, and we said be prepared for a pullback. Now market stands very close to the points that might be used for possible taking of the short position. Why we think that taking a short position might be interesting? In two ways. Because this is a great point that corresponds to both important patterns that we have. First of all, if you take a look at the fall time frame chart, it perfectly fits to the confidence resistance area, which is 1350. 113.50, that's we already talked about. And in general, if you remember, we said keep an eye on this level. If market somehow will break it up, start moving higher, in this case, indeed, we probably will have to acknowledge that yes, sentiment is changing, Bitcoin is trying to return back to the top. But at the current point, take a look just at the shape of this performance. It's very gradual, choppy. It shows no signs of the thrusting action. It mostly looks like a retracement. I'm not even sure that market will be able to reach the 1350 area. But let's just stay with the plan. So from that standpoint of view, this is an interesting area for taking short position. But it is even more interesting by another reason. So if you take a look at the hourly chart, recall our free drive. We said its minimum target will be just above this area. And you can see that minimum target of the free drive perfectly fits to confidence area. And take a look. Here, this might be potentially bullish hand and shoulders, reverse hand and shoulders. So if you will take position, short position here, you will short both patterns just in one bullet, because that pattern suggests that it might be and should be pulled back to form the right arm, and this resistance area also suggests that it should be downside respect to this level. So simultaneously you could possess for both patterns as this one, so it's rather safe here to sell, because whatever pattern will start forming, except maybe straightforward upper breakout, but currently with this performance I do not see big chances for that. So you will be possessed to both patterns. Then when the market drops somewhere back to the lows of the right arm around 109.50, let's take a look at the harmonic relationship between the left arm and right arm. You could move stops to the break-even and see what will happen. If market starts upper breakout, your worst result will be nothing, or maybe you could even get some money to close position a bit earlier. But if hand shoulders start collapsing, market starts falling down, you will be possessed for downward continuation. So that's why we think that watching for this area for a possible short position taking. This might be a really great idea. So finally, in the current circumstances, with the fundamental background that we see and with the performance that we see on the market, it seems that the failure of this hand and shoulders might be even base case scenario rather than the tail scenario in the current circumstances. And that will be even better because everybody sees the hand and shoulders. Everybody knows what to do with them. And while they will be trapped in the wrong direction, the downward acceleration might be even faster when the stops will be triggered below the right arm. So from that standpoint of view, this is the intrigue of the current picture. That makes us, suggest that this is the thrilling setup for now. Hopefully it's useful. Let's see how situation will change and return back to discussion of this setup on Monday.